Welcome everyone to the Profit Hunter Group, or at least the Gold and ASX shares webinar for Thursday, the 22nd of June 2017. Where's everyone from here? Let me know. Say g'day. I don't know why this keeps on popping up, but I don't want to play my game, share my game. Stu from Brizzy, how you doing? Hope you're all good. Cindy from Bali, I can see you're in there. I hope you made it back on the plane. Stuart from Sale, okay, and now there you go. A bit of sale from. I have a place in Phillip Island, Jeffrey. So go not quite close to Sale, I guess. So not far. Warrnambool, Jonathan, yes, that's pretty big. Good surf down there too, Warrnambool. G'day Ann, how you going? Shell Harbour, beautiful stuff. Okay, let's get started. So, what I normally do at this time of year is I ask what your opinion of gold is. Let's see, and I want to just launch this question. Harvey Bay, nice. Some of my friends are just moving up there now with their kids to Harvey Bay. Deb, I think that was. So I hope you're good. So let me know what you think about gold, and I like that little picture. There's a few raised hands. So we've got, currently it's interesting results that we're getting here on the questions. Very interesting, and I'll share that with you in a second. So why do we like gold so much? Is it because it's like the bloke's sort of diamonds, is it? Or is it because we are really in a world where we get excited because it's one thing we can wear and it feels good and it doesn't rust? Why do we like gold? Why does everyone here like gold? What reasons do we have for liking gold? Okay, so we have gold. Gold is giving us some nice results from you, and I appreciate your response here. This is fascinating what you've just come up with, and hopefully I can do this screen. That's not going to work, Cindy. I'll have to upload the recording later. Okay, so let's have a look at the close we're going to close this down and close that poll down, and I'm going to share that with you now. So what this is saying here is, okay, so what this is saying is 13% are bullish over 10 years horizon, 3% are bearish over 10 years, 41% are bullish over the next 1 to 5 years, 22% are bearish over 1 to 5 years horizon, and 22% have no view. So 41% of people are bullish, which is double the people who are bearish in the next 5 years. Now, I know I've asked a confusing, fairly good question. We're seeing people are saying hedge. Jonathan's saying it's a hedge against a downturn, and also it seems like it's associated with doom and gloom, and people think financial systems need a reboot and diversification. Okay, the good thing about Australian gold stocks is as follows. They make money and pay you dividends. What's the bad thing about gold itself? When you buy it, you have to store it and pay interest on it, which is quite annoying. So this is our disclaimer and warning. Now, I'm pretty interested in the result there. 41% of people were bullish. Not everybody was bullish, which is pretty interesting in my belief. Why? Because at the moment we're coming probably to the end of a cycle. And I've been working a bit on the cycles work, and I just wanted to pull up some pictures on the recent things that I have been doing. I think where I'm going, and maybe they're not going to. Here we go. So we talked about selling gold then, back up on those tops. This is when I last did an email out. And what's been happening is that gold's been declining, and this is a normal disclaimer and warning. Tonight we're going to look at 10 tenacious gold stocks that could be set for bigger and better things. We'll look for the slippery 17 gold stocks that have had their day, and some of those may be starting to get a little bit better, and some of them are just trash. We'll look for ones that golds may have one more go up, and ones that may have one more go down. We'll have a little bit about the Profit Hunter Group membership and what I do for people, and how you can get my market support every day if you hang around for the question and answers afterwards. So who am I? I've worked at corporations like CIG, OSAT, Qantas, Macquarie Bank, Aberdeen Asset Management, which was previously Equity Link. That was in the funds management area. For Macquarie Bank, I got to trade the companies and the bank's money, and as a proprietary trader. And at OSAT, I managed the currencies. At CIG, I managed the money. We're just talking about planes. A lot of the planes that you're seeing on Qantas are actually nearly 20 years old or 25 years old, and I funded a number of those and did the currency hedging for them. So a little bit scary. OSAT, I managed the satellite procurement program in terms of currency risks as well. And I like to surf. So what we're going to hear about is Elliott Wave, and I think in Elliott Wave terms. And I've managed $4.5 billion worth of assets at Equilink, at Aberdeen, now called Aberdeen, and traded basically on whatever I wanted to trade with Macquarie Bank. It was great fun there. So what do? I look after a group of different people, probably people just like you. I advise actual brokers. I advise about what to do, financial advisors, financial planners, retirees, SMS monies. I have a number of medical professionals who take my advice and who trade. And so there's a variety of things that I do. And I advise traders and help them get through what they do. So from investors to traders. So what I do is I look at charts, I look at cycles, the psychologies, news, and then I also do some educational programs. So this is a little bit about the methods that I use and how I think. I use Elliott Wave, and Elliott Wave is a specific way of looking at the markets that gives me an idea about probabilities. Write that down. It's all about probabilities here. It's not about being right all of the time. It's about working with what we know works a certain percentage of the time. I can't promise you perfection in the market. It's not there. An example of a trade we put on yesterday was to buy CBA at the end of the day yesterday. Now, who saw me on television saying I thought the banks would go down? A few people said that. Okay. Now it came to pass that we got our CBA decline yesterday. Just remove all this clutter. This is my live sort of charts, the sort of things I work off each day. So CBA, I said, was one of the stocks we were interested in the other day. Now, we're on the daily bars. So what we did was we bought on the close of yesterday. So that was close of Wednesday. The market had come down. You might remember that I was saying that on CBA, I liked it better than the other banks, and we basically bought in somewhere around like close to the low, whether it's $80.80 or $80.85, depends on how you would have traded. So what I do was to look for the way this rallied in this market, CBA, and then to pull back. And we got a good pullback. And it's come back down and it started up today. Now, we won't talk about CBA in particular, but those are the sort of things that I do. I love to pick tops and bottoms and then go with the trend using Elliott wave. And when I look at a chart, this is what I'm thinking when I look at the chart. And you might have thought, why do I talk about waves and things like that? Well, this is the theory, and this guy created the idea. He's a Ralph N. Elliott. It was around about in the 1930s. He wrote a book called Nature's Law, and then this was popularized by A.J. Frost and Robert Prechter later on in the 1970s, 80s, and 90s. Now, Elliott wave can be abused and Elliott wave can be complicated. Some people will say to me, David, you're not perfectly counting Elliott wave and you're not doing it the right way. And these are people who are quite analytical and they like perfection and things to be right. Fortunately, markets are not perfect. You have to use some judgment in this and just work on the fact that these are probabilities. And so let's move on. This is the basic tenets of Elliott wave. First off, that markets move in waves of emotion. And what are those emotions? They include boredom, confusion, euphoria, depression, steady as she goes, and sometimes unrelenting grinding. So what Elliott said was that each and every wave is part of a larger wave set. And that means to get clarity, if you're not sure what's going on in the current time frame, you can look at the higher time frame or look at the lower time frame to give you an idea of what's going on. See, Michael, you did ask me to ask about a number of non-gold stocks, but I did talk about it. So the important thing to remember is that hard and fast moves are impulsive waves or trends. Thank you, Michael. I appreciate that. I like that. Best Elliott wave. That's the best Elliott wave explanation I've given. Okay, so this is the pattern, and I don't think this. I shouldn't be putting up here the emotional pattern. I don't know why it came up there. Anyway, basically the first drive up in a market, and let's go from the way up. This can be applied to the way down too, but let's look at the up move, which we call bullish. Who here has never traded before and never attended a David Hunt webinar? Let me know, please. Just say, yes, I've never attended, no, I've never attended, and I've not been trading, or I'm new to trading. Let me know. So I do a little bit of jargon, and I will try and pull myself up when I can. When I catch myself, at least. Never DH webinar. Okay, fantastic. Stu, good. Welcome. I hope I don't scare you too much. So the first wave up is the first market movement is wave one. People often ask me, how do you pick wave one? I say, I don't know. Sometimes I'll pick the bottom and it may develop into wave one. But wave one, when you see wave one, the number one, an odd number, means that it's an impulsive move, which is a strong move. Okay, attended my seminar but not traded. Get it, Michael. So what we've seen here is that somehow the market changed and it started to go up. Maybe it was a new float, maybe it was just there was some trading activity before. Now wave one is interesting because generally it's hard to work out what it is. Now remember, we're working with probabilities, and I'm trying to work with probabilities so that we know if the market does a certain pattern, that 60% of the time you can make some money this way, or 40% of the time you'll make some money that way, and probabilities are what we're trying to work with. So wave one is where you get a big move up, and then eventually it pulls back, and we get an ABC, what's called an ABC pattern to the downside. And unfortunately, my change in I have to change a couple of things. We've got a color issue here. I changed a couple of things, and we've got a bit of color not appearing on the screen. Let me, if I can. This is kind of weird. It should be coming up there. Anyway, so we get wave 1, 2, wave 3, 4. Yeah, here we go. I've got it. I can give you some color here. A, B, C, D, E, F, G. I babble to myself. I don't know if anybody else does. But I'm distressed. It's not coming out in the right color. There we go. Now, okay, here we go. This is better. So we're getting an ABC pattern to the downside. These are generally seen when you think of Elliott wave, you get corrective letters. Now, I'm not going to talk about or explain a lot about Elliott wave. There's lots of recordings that I've done in the past, but I just want to show you the stylized picture. So we're looking for an ABC pattern to the downside. Now, write this down. This pattern here is when we see an odd number, it's an impulsive number, and when we see a ABC, when we see letters, that's generally identifying the subsections of a correction. Now, when that's finished, a wave 2 is the one that, wave 2, when the ABC to the downside has come, you've got the chance, this is the C finish, to complete wave 2, the final move in a correction. Now, I hope that's fairly useful for you at the moment. Just bear with me for that reason. And okay, and then if this is perfect, and this is a stylized example, but we get an ABC, generally this retracement of wave 2 will finish with a 61.8% retracement. You've heard the word Fibonacci. That's where this comes in. On average, it will generally fall around the 61.8% retracement, a fairly deep retracement of wave 1. Then the market starts to break up, and it breaks through the bottom of the finish of wave A and the start of wave B. And we can start to buy and try and buy around wave C, but if you haven't bought around wave C end, you can buy wave A, or you can buy the break of wave B, or you can act like a lot of fund managers who like to sit on your assets and their assets and earn some money by performing. They wait to the break up above wave 1, and their economists tell them to start buying, and they provide the fuel for what is wave 3. Now, wave 3 is a very strong, Tom, if you can get the questions to be about the gold stocks. If you ask me, is this stock a gold stock about in a wave 3, I could answer that, but let's keep on focus. I know I did start with CBA, but I wanted to show you we do pick bottoms and tops in the Profit Hunter group, and you can get a hold of that. So we see that big move. Now, what would you think about wave 3? You've had a 40% chance of making money out of wave 2. Woo, you said 40% chance? That's not very good. Well, it's very good because if you get in and you get stopped out and then you get back in again, you're probably getting in wave 3, which is one of the more powerful moves. And wave 3 is never the shortest move out of a 5-wave set. I'm a surfer, so I like 5-wave sets. I like 20 wave sets too, unless they're really big and I'm getting pounded underneath them. And we see a big move up to wave 3. So what is it? Wave 3 is where lots of people can make money, and that's really powerful. We've seen wave 3s in the US S&P. We'll see wave 3 on the Michael. We will show it on a chart coming up shortly for you, visualizing the real ABC. So we see a wave 3. This is where the markets run very fast, so fast that you can't buy dips and you have to buy breakouts. If you get a little dip, it's on a lower time frame. On the weekly charts, we see on the after wave 3, we start to see a confused trading pattern, which is what? What's the confused trading pattern? I'm trying to get your charts up here. Sorry, there's some close. Okay. And we get an ABC pattern in a W4. So this will be A, B, C, D, E. We've had a big uptrend. It's got to go sideways in time and price and create confusion. Now what happens is, write this down because it's not going to display on the screen, 38.2% retracement of the entire length of wave 3 from the bottom of wave 1 up to the top of wave 3 is what you would expect in a wave 4 in general. So what do I mean by that? Wave 3s need to be retraced about just under 40%. And that next move up has about a 70% chance of making you money. And as you can see, I'm just trying to get this little description up here somewhere. I'm going to hunt and peck. It's funny how they're all white. There we go. So there's B. And over here, you'll find a C somewhere. I can do this. It's probably not. It's probably something else. This is an E appearing the wrong time, and this one will be a... This is a bit of a guessing competition I'm playing here with my computer. Does anybody feel like computers laugh at us a lot? They just sit there going, ha ha ha, I just moved this key over there. So this, here you go, you can see this. So there's A, B, and C is down here, and then we come into wave 5. Thanks, Stu. Okay, so 70% of the time, a breakout of wave 4 will, they're not always triangle, Peter. These patterns will alternate. If you see a zigzag, which is an ABC correction, the next one you would expect under the rule of alternation in Elliott wave to see a complex ABCDE pattern. If I can just pull out the other one. No, it's not going to do it for me. Anyway, when I find it, it will come. So this ABC, so it's not always triangles, but they can be like a zigzag pattern here. There's a few different patterns, and I occasionally show them in the webinars. Tonight we're a bit pressed for time. I've given a little bit of quicker time than usual for this, just an hour. So wave 5s are about a 70% chance of making you money, and wave 5s are about equal in length to wave 1s. So if you're looking for price targets, Elliott wave gives you these things. And I can't show you this, it doesn't want to show up, so I'll draw it in, however badly. So this is A, B, sorry, A is here, B is there, C is there, and D and E are correctly placed. So just ignore that. Ignore this one and that one. So what that means is we get a lot of triangles and then we get a break up. and that has about a 70% chance of making you money. This is a 38.2% retracement on average. Sometimes it goes a little bit shorter, depending on how strong the market is. And this is about a 61.8% retracement. And sorry, it's not all beautiful. So it's a retrace. Now, notice that wave 4s are confused, wave 2s are dramatic. Now, let me tell you a story. When I was coming back onto, I was in the, just before I went on Your Money or Call on Tuesday night with Elliott and Mathan, a gentleman walked out and he's got a bag there. And I said, "Oh, g'day, how you going?" That gentleman on the 4th of October 2011 wanted to punch my head in. He absolutely wanted to kill me. He was very, very angry with me because I was telling people to buy a certain stock market on what I thought was the bottom. That certain stock market was the Dow Jones Industrial Average on the 4th of October 2011. And if we go back in time, you might see where this is. And I'll pick it up there for you. And it was funny, he still hates me for it. And I thought I was helping him. This was the, where are we? October 4th. He is Greek. Jonathan, yes he is. Well spotted. Anyway, he still hates me. It's pretty funny. Should have seen the way he looked at me. Anyway, this is the day the Dow's plunging and around. The Dow's plunging and it's about to open, and I basically said on the 4th of October, buy the Dow. Now, this had been completing an ABC pattern to the downside, in my opinion, and it was right on cycle. And I was busting out of my skin. What I didn't know is the gentleman who was working for a bank had to sack 30 or 40 people that day because the stock market had collapsed, and I'm there telling him, it's time to buy. Busting out of my skin, and he hated it. So, reality is sometimes even, I thought these people loved it when you told the market that it was going up, because they always say it's going up. Anyway, so let's move on. Here's a classical Elliott wave pattern and the psychology behind it. Now, let's look at these ones. Wave 4s are confusion. Now, the 70% success rate, 70% probability, success rate of at least making the top of wave 3 comes from the actual statistics when you grind out looking for fourth waves. So wave 4s here are confusion. What's happening there is there's a battle between the buyers who missed out and the sellers who want to take profit because they've had a good run. So it's sellers are pushing down, and the buyers who missed out on this big run up are pushing up. And so the price contracts. And then, but everyone's saying, surely this is a bull market, and they get confused. So it's a confusion pattern. The emotion is confusion and frustration. Why aren't I making money? Is what goes on in fourth waves. And eventually people stop being interested and then they just give up, and then the market pops up, breaks out, and takes you up into wave 5, where wave 5 equals wave 1. So I'm always watching. I particularly love watching the other commentators on the television who I know are very emotional and who I know don't know what they're doing. And I love it. I used to be able, there was one guy who used to look so depressed when I'd walk in, and he see me walking in and it looks so sad, because I used to do the opposite of what he said a lot of the time. I would say it. So these things are really useful. Yeah, Stu's saying, me too. They miss the signals that others see through Elliott wave. They do all this extra work that you can do in you don't need to do, you know. And then they say, oh, the cycles are important. And then they'll say, oh, fundamentals are good. Well, the cycles said that fundamentals are good, and the pattern based on 2011 was the time to buy and get serious. Anyway, so what we've seen here is wave 3 is party time. The top of wave 3, everyone's making money. People are trading from home, the kids are trading, you know, little babies are trading, grandmothers are trading, and everybody's been making money. So it's the best thing. It's party, party, party at the top of wave 3. And wave 3 is bang, 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 supernova stuff. So what happens at the bottom of wave 2? I've just explained it to you. There's depression, there's anger. Even Peter Switzer was bearish and depressed on the 4th of October 2011, and I was talking to him and he looked really down. I said, down, Pete, tonight's the day for the low. You should be excited. He said, oh, this is terrible. And Julia was the same. Oh, this is the worst thing ever. I said, Julia, we lived through, I used to sit with her and talk on 2008 during the decline, and it went to new lows in 2009, and we're not even near there in 2011, and she's depressed. This is the worst markets it's ever been. So depression is wave 2. Okay, so you get a lot of ideas about what's going to happen next by what's going on in those corrections. Has everyone got that? I need some confirmation. This is the sort of thing that I'm looking for, and this is why I can pick tops and bottoms fairly quickly with a decent stop loss and get an idea of when the market should turn. Here's a bit of a case study. What can you do if you know how to pick a top or bottom or where the market can go to? Well, you can start to take some profits at different times. But anyway, so you get a higher probability of success. You can be more confident, less scared. And one of the problems of investing is you're dealing with the unknown. One of the problems with trading is you're dealing with the unknown. You can have more confidence when you've got an idea of where the stock should go to, where your stop loss should be on. So here's a little bit of a case study for a trader, and Cindy's on. I don't think I can do this in elegant form, but I'll see if I can do that now. Let's see if I can do that. And animations. And okay, beautiful. Things should happen properly now. So here's a bit of a case study. Before, she took good trades and knew how to make really good money, but often gave all of the profits back. Who here associates with that? You worked out a plan, maybe you've bought some things using some fundamental analysis, and they've gone flying and they've gone up and you've been making lots of money only to find it fall back down. Who here's found that before? Just raise your hand or say yes. Who's made a lot of money and then given it back? And I know Cindy was making good money and on what she was doing, and she used to often give it all back, and that's frustrating when you put your soul and heart into it. But after I worked with her, and she came to me and was really keen and like talented in a lot of ways from picking stocks, but she gave it back. One of the things I did was to change that and to basically get her to make good profits, what she was doing before, but to actually keep them through doing what we do with the profit hunters. And she says, thanks, Dave, changed my life. Now, I can't tell you the numbers that she does, but they're impressive. And Cindy's off in Bali today. You shouldn't have missed the plane, Cindy, but I hope you're good. I would have thought you would have been out cocktailing at the moment. Now, so I would like to know whether you can do this in your head. If you can't, that's okay. I've gotten a couple of emails from one lady who just, I don't know if you're on there, are you? Where are you? Anyway, just saying she wants to be me, and I'll go, oh, well, you know, that's good. But in terms of charting, and she actually qualified it with a in terms of charting. So it takes a while to do this, and I've hit you with a lot of information for some people. For some people here, it's probably not enough information, but that's what I basically think of when it's in a chart. If it's in a triangle, I'm looking for the next move out, and I'm looking to take some profits. So what I did was I taught Cindy how to take profits by being a member here. Okay, so let's look at the COMEX Gold Futures chart. Now, a little while back ago, you asked me to show visually, Michael, what you wanted, right? So show an example. Now this is really, it's what you're asking for. Okay, so this is an Elliott wave pattern, and if this will work, I need to kill this screen, pointer options, laser pointer. So this is gold back from 1975 when it first started trading on the COMEX Futures Exchange. And I'll call this wave one. There was a lot of excitement, a lot of people I learnt off technical analysis, Dawn Bolton Smith, and some Bob McGregor, and a lot of other famous people were in this big bull market for gold. Doesn't look like a big bull market now compared to the run up from 2000 to 2011, but this market was steaming at that time. It had come up from being like $100, it had gone up to $800, so it had gone up 8 times. And we could call that wave one. Now, we could call this decline an A. We could call this decline a B. Now, there are different subdivisions of these, but you can see this would be a C. So, Michael, you asked about that, and that's like an ABC pattern. Now, around here at this time, the smart people in the central banks of the world, and notice this is a yearly chart, the smart central banks, people in central banks in the world, sold their gold. They decided that we're in the year 2000, we don't need this gold shit. The public doesn't need to keep that. So the central bankers said, right, we're going to use US dollars, the most stable currency in the world, as a port of value. And so they dumped it for about 6 months or even about 4 years. And then it started up on really good volume. This is all classical stuff. And boost up. We could call that wave 2 by the time that it broke through this point. Now you'll notice here that the retracement between there and there down to this area was around about that 61.8% retracement. Now I walked around, I don't know, is anybody from the Technical Analysts Association here? Was anybody at the Perth meetings? Was anybody at the Melbourne meeting and the Gold Coast meetings that I was at this year? Okay. Now I stood up and at these meetings I told something that people didn't want to know. I said to buy Telstra. And I started saying buy because it's fundamentally you're getting a good dividend, around about 10% at $4.10. You can do this when you're getting the right retracement area. We were looking for a retracement down to those kind of levels. And I stood there and I said, do this. And people were astounded. You could buy this? Well, last year was when, because of the low and the cycles, we bought on the day, a few hours after, just on the time that Donald Trump was announced as elected, we bought the S&P and put on signals on that. You can do that when you understand where these times are. You need to have a stop loss in case you go wrong and it's not right, but when there are times where you can step in in the face of extreme strangeness. Now, this wave 2, we look for wave 3. You'll know the S&P chart. It kind of looks like this with November 9th when we bought it down here. And it's gone up. This is still gold stocks. Gone up to wave to a point where we could say, is this wave 3 or is this a bigger wave 1? I'm not going to go into the debate about that, but then it can decline. Notice this little line here that I've drawn in. It's called a downtrend line. Now this retracement is a wave 4 or wave 2. It's either wave 4 or wave 2. What would happen if it started to fall out of this pattern and break to new lows around about that 900 area? If it broke below 800, write this down, gold is in hell. But at the moment, the pattern is somewhat bullish, and you'll see that last year we made a new yearly high. Now, Cindy's been talking and asking me all the time about gold stocks, and she's the reason you're seeing this gold stock webinar right now. So, if this breaks down, it's a bit of a worry, but I'd still be buying it down to around about $900 or $875 because it would land on this top. It could still be what called wave 4. And the implication of this is that if this is wave 4 or wave 2, it goes substantially higher. You'll hear a lot of people saying how wonderful it is and how good gold is and how great it is, but I don't get buying physical gold. I mean, I bought some silver back over here, physical silver, and I held it for a while because it was bars. I held it through there and it ran up, and I've still got a little bit because it cost me bugger all down here when silver was $4. So silver never came back to $4 to bad lows. So what we're seeing here is that this has got the possibility of higher. So I believe in the longer run gold story if this can substantially get above this long-term trend line. We might have a look at that later. But just remember, hell is below $800 for gold. Notice that volume has picked up. Last year, volume is kind of on balance for the same amount as last year in terms of volume. So these are the slippery gold stocks that at the moment I wouldn't be too fussed about. Now we can talk about them if people want to pull one out as a question. We'll certainly go in and have a look at those ones. Which ones? I'll pick two out of these. I'll answer two questions on these. Who would like, out of this selection, what is your interest? NML, says Rob. Okay, so one cab off the rank. So let's play with NML. Now NML is not my favorite one. It could go to new lows, maybe around about 0 cents. Why is that? I don't know. Who cares? Does anyone remember Dick Smith? I stood up there and said Dick Smith's no good after it floated, and I said I'd wait for it till it got to 80 cents, and at 80 cents I said no, that's no good. And at 30 cents I said, oh, it might be all right, and then it disappeared up its own bum. This is showing some not so great signs unless it can clear above 5 cents. There is a chance it's double bottoming here on a shorter term basis. So if you wanted to have a flutter on it, 2.6 cents is your stop loss, but don't expect to be making too much money out of it there if you're into it. See, we can see it's starting to come back on kind of lightish volume. So where did I say it needs to get above? I missed that level. See, it's above about 4.2 cents would confirm that it's okay. So Navarre, let's drop down at the dailies. We can see kind of doesn't want to trade much and volume's not that great. So here on a shorter term basis, above 3.5 cents is good. Now, do we have any other questions on any of these ones. The slippery ones are AGG, AUC, Blackham's, GMN. Wherever I've said here that if AUC is near the end or GMN is near the end or TR, this may be near the end of the down move. Let's look for Troy Resources. Seeing as no one's asking, they must be crap. You want to look at the ones you can buy. Troy Resources, see this? If you think about this, 1, 2, big 3, 4, 5. Okay, so Troy Resources kind of looks like Navarre, or Navarre, but I would say Troy above 21 cents would be okay to think about. On a longer term basis. At the moment, it's trying to finish, and so maybe it's got just one more little push down. You might try and get it around about, just around about 5.5 cents or 6 cents, or if it can slips up above 12 cents, and your stop loss would need to be below 3.7 cents. Okay. So those ones, worry about OGX, worry about PGO, PGI, PSC, RED, RMX, and WCN. Okay. Michael, these are the listings of the ones that are on the slippery slope. Okay, next one we're going to move along to. These are the tenacious 10. These are the stocks that looks like this 10. It doesn't look like this 10 there. I'm missing the 10. I don't know where the other one went. Maybe I deleted it in my flying around. So AAR, EXU, we've got Stu's a fast one, and we're going to have a quick look at Gold Road. So give me some Gold Road. Now Gold Road has been a marvelous thing. One of my friends, journalist, and he's seen a lot of what I trade. He's been involved with Gold Road on a lot of bases. So at the moment, we've got about 83 cents target, and it's quite hesitant at being, we've got all three. We've got Gold Road, NST, and MOI, Millennium. So at the moment, let's think about this. What can we see? We can see here's a little stepping thing. Here's a big retracement after that. So this could be wave 1, 2, 1, 2, 1, 2, 3, 4 decline, and this is rough. One thing that I do, and then we're looking here, we're into the 5th wave, so I'm not happy about this really above that, towards that 83 cents. We can see here we got a double top at 75 cents. It may have the legs, but it certainly hasn't got the volume at 83 cents, and it'd start to be in a bit of trouble. Now, one thing that I do is if I don't know what the pattern's doing, I reduce it down onto a line chart. So this line chart here shows me lots of closes, lots of failures to close above 72 cents. So a close above 72 cents begets, on the weekly basis, begets 80 or 83 cents, and I'd be worried about it below 65 cents. Can you see how I'm trying to lock different time frames in together? Notice here that this 4th wave was a 38.2% retracement. So we're looking for 75 cents, which is the old top, 78 cents, 80 cents, and possibly 83 cents on this move up. So you might think about Gold Road as one of the tenacious 10 with an upside that you don't want to fall too much in love with. Now NST, North Star, Northern Star, whatever they call it, I saw this company speak, and it was up here, I think in August some stage, July, August in Melbourne, and I said, this has got to go down. It came down to the right spot and it started up. So what are we talking about here? What's our pattern look like? Now forgive me because there's a bit of noise on this chart, different swings and things that I use. But we can see, let's call this a fourth wave. Where's the old tops? Kind of back onto here. And let's call this a wave 5. We notice that volume is good on the way up. We notice that indicators are diverging. That's normally what happens in wave 5 if you want to take some quick notes. So what can we do with this drunken soldier? Think about $5.89 if it can click above $5.30. We can see that it's done some retracing into that $4.66 area as a normal retracement. And we can see a lot of overlapping, which is what should happen in a fifth wave. So you've got 585, there's a lot of overlap. It's a struggle street pattern, if you like. And last week was a bit of a heavy hit to the downside. It's not over. I'd say it's okay if it can climb above $5.10. It's not so great if it breaks $4.60. Sorry about this. Things pop up. So at the moment, I'd say it's still okay, but maybe getting ready for the end there. Okay. And why is it going up when gold's been doing this? Gold's been falling, but it's been going up Northern Star. Now I'm going to get to a couple of other things shortly, but I've been targeting in my talks on my forecasting the end of June for a buy in gold. Let's talk about gold itself. So I've been looking for a buy in gold, and it's currently come down into the right area. Double top, got bearish up here. We actually a short Profit Hunter Group trade, short from up this here. So I nailed that top. Number of people were in the audience for seeing this top predicted. And now we noticed here that we got wave, let's call this wave something. Imagine wave 1. It's not really proper wave 1, but at least it's done the right thing and it's come down. We're getting some strength today in gold. A lot of the Aussie stocks have been not getting too badly killed while gold's falling, which is not what you would think. Plus the Aussie dollar's been going up. So what's going on? At the moment, I think we're close to a bottom in gold, and generally this is the weekly. Yeah. So generally, it does like to bottom the end of June, early July, and then has a good run up. So get ready for something reasonable to happen in gold. Okay, now back in January 2000, this is just jog my memory stuff. At the ATAA meeting in Newcastle, I think Chris is on here, and Chris was there. I said I predicted a cycle low back in January 2016 for a buy in gold December 2016. So we've seen that. If it can take out this 1300 area, definitely, but to a certain extent around about the 1284 area, this has got a good move in it. It may need another week or so before it gets juicy. It may be a bit hard to trade until after early August, but gold has got the better chance from now on for a run up into November than one of the better things that it's had for quite some time. It's cleared out. We notice the volume is kind of not so destructive. We need to play with it, but gold itself is interesting, and the Aussie gold stocks are staying up. Okay, so the next question off the rank was Moy from Jeffrey. Sorry, I got sidetracked with the other ones, but I hope this, is anybody getting in? Is this making sense? Let me know. I'm going with the tenacious 10 at the moment, Tim. I don't, EVN is on that. I've got 3 already, and I'll talk about EVN because it's evolution. People love it. Millennium. Now, what's going on with Millennium? The first thing I notice, decreasing volume as it's falling. Notice here, what are we seeing here? How have I taught you? Sorry, didn't taught you to do that. That's to type in something wrong. B. I'm the Warnie of stock picking. Thanks, Tim. So here, we've seen it come back down here, and I'll just get rid of this little baby and see if I can, come on, give me, never work with live charts. I always work with live charts. I never do up many canned charts. I'm an idiot in that way. Oh, Mary, you're doing that, are you? Okay, so here, let's call that ABC. Good move up. And if it's really taking out this area here of 23, 24 cents, Millennium becomes a buy, targeting towards the 49 or 50 cents area. Your stop loss would be below 14 cents. So Millennium has something that shapes up. This is corrective, this is impulsive, this has got good volume, this has got bad volume. Are we making sense? Okay, so Millennium. Somebody, if you can keep a tag on what I'm saying here, because once I've said it, okay. So Moy, I covered that question for you. It was Moy, good. So we want to do some trades on around this. Okay, now, okay, what was the next one? EVN. It's a quick one, and that's a longer term one. Okay, EVN. It's on the list. It's got some good consistency. It's had a good fall. Notice that it's hung around an old top and lived. One thing that we're missing now is volume. So we might be going in for an ABC, ABC, ABC. We might be forming a triangle on this one, and it might be harder to trade than you think. So this triangle here might look like that. It still implies going up, but it needs to clear and close the month above 266. We can see a target around $3 or $3.50. Now I want to say something. There, many of you, it's funny how many professional traders I attract in the group for the profit hunters. Now I find that fascinating that people who are often way better at trading than I am, want my advice, and really, really doing some marvelous things in trading, want my advice, and it's very flattering. So I've found quite often that there are people who are very good innately, but just aren't running at the pace that they want to, and they need a little bit of a guide and a little bit of a, okay, is this way the way to go? And I provide that. So anyway, that's just by the by. So evolution, looking for $3, something like that. And what can we think about evolution on a different scale? So, oh, there's my other thing. Might want to have a look for where this would be. Notice here we've got kind of a weird setup where we can't really hang our hats on a wave 2, or can we? 1, 2, 3, 4, 5. Let's go with this. Let's look at some of these targets you might consider from this low to there, to there. We might be talking about around about $3.77 for evolution. Notice that it's been back to $4.79. If it can keep going, notice that this is the quarterly chart and we're making new quarterly highs. So it's okay to go with it. I just want to see more volume on the upside. Okay. Okay, so we've done evolution and we've had a look at the tenacious ones. Let's look for gold. GOLD. Now, there's one stock that I do like to look at, and that's GDX. This is the ETF on gold, Australian market. Now, we'll notice here that it has a double top effectively around about the $177 area. It needs to really blow that out of the water. What's the problem with this at the moment? Well, as gold goes up, if gold goes up, the Aussie dollar goes up. What's the problem with this also? Well, it's been reconfigured, rejigged, whatever they called it. But we've seen it come close to a nice retracement. And we can see that it's making higher bottoms and higher highs with a bit of overlap. So let's call it wave 5. Notice there's divergence on the monthly charts way back. It may go 178, it may go 185, it may go 200, but the next move off is not the best one to be running with. It's the best one to start to take some profits if you're long GOLD. There's a couple of problems with GOLD. There's a heavy investment in it by speculators who don't know what they're doing. And people are putting money into it, so it's confused itself. One good thing that it's doing right now is it's confusing itself and formed a bit of a triangle and tried to break out. So if it breaks above 164, look for 177 on the top side, stop loss below 154, or you could hang around and wait for 144 on the downside. Funny about that, that's a very nice Gann number if people know their Gann. Next cab off rank. This is important to remember that to trade Elliott wave well, you need to go with the flow, leave your ego at the door, and go with the flow of the, like a river going down, because little water molecules, they're resting up here, and then we get the fast run down or the fast run up when they go for the waterfall, and then they get confused. Notice that they're sleepy, they're sleepy, and they get charged down, and then they get confused. It's kind of like a wave 2 correction, and then a wave 3, and then bubbles. So it's about the trading. You need to watch the corrections and hang on for the impulse moves, and always trade with a stop loss. And Elliott wave gives you structure trades even when you're wrong. Now, I'm not going to cover the bargain basement stocks. These were ones that we were interested in before in these other webinars. DRM went well. NML was one of them. Silver Lake was one of them. I'd like to ask you, where are you now in your trading? Have you ever gotten into a trade you shouldn't have? Now, be honest. Who's got into there? Michael is saying, from a novice, it looks as if Moy may be a good option. Yes, and nuts. Stop loss take me out, but okay. Stop loss is good. Have you ever been confused about the direction of the market? Raise your hand. Have you ever been stumped as to where to put a stop loss on? Well, that's what I do all day for people. Give them a direction, give them a price target, give them on whatever stock or commodity. We do cover gold. I cover gold. Currently we are in the short gold from Where is it? We're short gold from 1290. Who here trades commodities? Does anyone trade commodities? It has been a bit of a dying breed unless you're in the banks or the area. Also been short crude oil, which has been a nice trade. So Michael trades. Here we go. So this is important, and this is a change of the trade for those people who are on. Okay, so gold, where are we here? We've got gold, we're short from 190, we added on break below 1250, and it's popping back up. So stop is now at 1255, so we may have already been run away with. Let's just check that. Probably also, no, not yet. So we're still 1255. Dailies. Yeah, no, we've been stopped out today for a profit. Filled. Now I'm not going to go back in yet on this because we'll consider that in the morning and how it goes. So we've taken profit on this on the shorts from 1290 and scratched a little bit off on the 1250 short on the break below. So that's what I do. You get the trades. Now what's important, and did you learn enough? At the moment, I think we've got on the list, we've got MOI, EVN's kind of a little bit iffy, NST's a bit good, but these are ones for the next move up. The Aussie gold stocks have performed better than gold for quite some time, and they may not go as well as gold on the next leg up. So if you're going to be trading gold in some ways, you want to pick it up and use gold itself. Okay, now we have here a special. This is end of day financial special, end of year financial special. 17% off to the subscriptions for Profit Hunter Group memberships to celebrate across the board. So if you're an investor, you look for the investor trade program. If you're a trader, you look at the silver and gold versions. If you're a person who likes to go with the flow and asset allocate with the cycles, then you would look for bronze membership. And if you go to this one, a member, I'll put this up there for you. We have a special on for new members to come along to, and it's at this one. I think I haven't copied it properly. Yeah, won't do that. And a member card. This will work until the it will work until the 1st of July at around about 12 noon. And the coupon code is EOFYS17. Now, NCM was not on the list tonight there, Peter. I'm kind of running a bit out of time. There's some things I've got to do now. That's why I set the finish for 9:30. Remember that if you're going to go to this place here, I'll show you where to go. we go to profithunters.com.au, a member cart. And then you might choose the subscription that you want. It's for the memberships of Profit Hunters. So you might want to do a silver annual membership and get the discount. So you would add it to the basket. Okay. We have to make sure things are compatible, but let's view basket. Okay, so we're going to go to view basket. Say, let's call it a bronze monthly membership. What you would do is you go over here and you click on the coupon. There's a little button over here, and then you put in this coupon here, and then you apply that coupon, and then you click over here and you update it, and then you can check out with that one. So, okay. So there's a listing there that you might have seen on the emails that I sent out, and we do the forecasting in the bronze membership. The active trading is in the silver and gold membership. If you're a financial advisor, they tend to be either silver or gold members, so they can advise their clients the right way. So here we're going to go, we might pick up the silver annual membership, and we go to you've got to go to view the basket, and then we'll put in the coupon, and then you'll get nearly $700 off them on the price of the silver annual membership. And silver annual membership covers ASX shares. You get to ask me, you get to see the answers that gold members have each day. World indexes and shares, commodities and forex markets. So quickly, we had a question quickly from NCM, and I'll get out of here. But those are the ones to stay away from, which you saw, and the ones to get out. NCM is a bucket of confusion, and as I've been saying, it could go down to $14.69 or up to $29.67. It's a bad bucket of confusion. And I wish you all the best, and PHG members, I'll see you at 8 o'clock in the morning for the Profit Hunter Group Speed webinar. For gold members, silver members will see the recording of that at various stages, from the forex, commodities, and world indices and ASX. Once those webinars are finished, you'll get to see those recordings and the Profit Hunter Group trades as I showed you there before. In summary, gold stocks. Stuart's asking, Stuart, sorry for calling Stuart, is asking for a new trader with reasonable Elliott Wave familiarity. What membership would you suggest? Are you trading short term or longer term? It's good to see you back, Robert. So you're doing both. Then I'd say silver membership to get used to me and the way I do things, and then step up to gold. There's very active traders in the gold membership, and so I like people to do a little bit do a bit of work. So yeah, short term for active, daily, and weekly. So that's really either silver or gold. Bronze would be a little bit. Bronze is more where I do my forecasting and strategic planning every Monday, every second Monday. We do that. And yes, for the super fund. Excellent. Thanks everybody. Have a very enjoyable evening, and talk to you soon. Have a good one. Okay, and by the way, there's only 100 coupons on that, so if you once they're finished, the machine will shut them off and annoy you. So get in early. Cheers everyone. Bye.